you so much for coming today. I hope all of our panelists are sitting right under their pictures, how they've been introduced. Thank you so much for coming. Fundamentally, we are talking today about institutional instincts, and we have a very unique panel because they are from different backgrounds, but officially all from the trade finance and now in the digital world. And what is unique is all of them are working in the region, but have experience globally. So what we want to talk about today is so much, what can we learn from the other regions? What is happening in Middle East? What is the forward-looking aspirations in the next 3 to 5 years? And I have just a few questions, but I'm sure the panelists will be here after the session if you want to ask more. Obviously, over the last couple of days, you've seen so much that there is all the new investment into the region right now, and there are very high targets and a lot of interest from various players. So maybe, Vakar, going to you, you're a connector across the world. You've been working across Middle East and all the other different places. What do you think about the market? What do you think is driving the market in terms of, the stable coins, tokenization, payments? What do you see as the key priorities?
Thank you for having me. First of all, it's good to be back to my second home. I used to work here in this exact building for 3.5 years, about 3 years ago. So good to be here talking about things I've done outside of this world, taking all the learnings. Yes, the bank itself is a long-standing bank. We've got a 130-year plus history in about 130 countries around the world. And so across the 3 lines of business that we run, corporate and institutional banking, wealth and retail, as well as ventures, digital assets are featuring quite heavily on the agenda going forward across all the strategic pillars, be it from CBDCs, which we've been participating from the outset in Africa, to the upcoming CBDC projects in Asia and Middle East. Looking at digital assets in general across all service pillars, from security services to capital markets to the trading desks. Our ventures have been quite prolific over the past 6-7 years in launching all sorts of products and services from Asia and the Middle East. And wealth and retail businesses began to catch up as well on distribution of wealth-type products, which includes ETFs and then hopefully very soon crypto. Again, yes, we are a connector of the worlds. We are a banker primarily, and then all the services that build around it on the institutional side, which includes custody, asset servicing, transfer agency, funds administration, and then the underlying custody and servicing of those assets. So we see a huge demand coming from the large end of town to service this particular industry, primarily because the bank provides the protection layer from a balance sheet point of view, which is quite hard to get because there are a lot of competing priorities in the bank. Everyone wants a piece of the balance sheet. But to be able to commit balance sheet behind crypto is a fairly significant undertaking. It takes a long time and effort. But because there is a certain type of clientele coming into the world, primarily enabled by my colleague on the right-hand side for Coinbase and leading from the front, there is a lot of demand coming in from those who have never touched crypto. They want to get into it, but they're not comfortable in touching crypto without some kind of balance sheet support. So yes, we're connecting the world there. We're connecting from the payment side. We provide payment rails for some of the largest stablecoins in the world. We provide bank accounts for some of the largest crypto exchanges in the world. And then from a tokenization point of view, we're now beginning to invest in that side as well so that we can connect the crypto story with the tokenization story while having the banking rail behind it, hopefully enabling people like Coinbase and Franklin Templeton in the long term.
Thank you so much. And I guess the key summary there is that the ecosystem is super important, which is why 3 of you are here. Brett, over to you from the Coinbase perspective, similar to all of us, perhaps not me yet. You have been coming here for 20 years to the region and you have seen the region grow. So what do you anticipate are the key themes driving the institutional changes, and what do you want to see more of?
Great to be here. It's a nice moment to be on stage next to one of the world's largest asset managers and largest banks. And of course, Coinbase Institutional activating across all fronts. By way of introduction, I run the institutional business, which includes running all the exchanges, the spot, international exchange, and futures exchange, the prime business that has within it custody, trading, staking, financing, and then the third pillar is asset management. The scene setting I would bring is I've always looked at this region. I've been coming here since 2001. It's been always a place that's forward thinking. I remember back to a couple years ago when we had this very forum and the big presentation where Abu Dhabi put up the beacon to the world to be the lead center of innovation. And it was a really nice moment. It was anticipating perhaps a moment like this. So the scene setting I would bring to you is we just had a huge milestone in the US. We had a presidential election. That election has removed arguably the biggest barrier to institutional adoption, which is the regulatory friction. So things are moving at much faster pace than anticipated. What's also remarkable is that the US finally, even before the presidential election, and in a period of great uncertainty and regulatory doubt, launched Bitcoin ETFs. Franklin was among the leaders, along with BlackRock and some of the world's largest names. And what's interesting about that moment is those huge names attached their legacy to crypto and to Bitcoin. And not only did they do that, they set a series of incredible records. So the Bitcoin and Ethereum ETFs collectively combined or singularly for Bitcoin have been the most successful ETF launches in all of time. And so really what that means is it makes crypto an alternative asset class that has been legitimatized. It's been supported by the biggest actors in the world, and it's drawing in a collective of different types of clients. And so that's the big picture framing. I think the putting the beacon here to bring the world's capital, I think it's been a smart one. And now it's up to us to capture the moment and then keep accelerating faster.
Thank you so much. And Christopher, we touched on the regulation point on the US election. How do you see the regulation moving forward? What are the key themes impacting now? How is it going to change, perhaps, from the utility side and perhaps on the broader side as well?
Sure. And by way of introduction, so my name's Christopher Jensen with Franklin Templeton. So global asset manager, not quite. Haven't been around as long as Standard Chartered, but over 75 years, and we manage close to I think around $1.6 trillion with offices all around the world, and we've been here in the UAE for decades. This is an important kind of strategic capital of this part of the world and globally, and so the way we approach digital assets at Franklin is really twofold. One is we are active builders in this space. So we're customers of blockchains, we're users of blockchains. We are part of that kind of movement of tokenizing real world assets and putting them on chain. One of our kind of flagship products there is a tokenized money market fund. And in addition to being builders in the space, we're also investors in the space. And so being a global asset manager, recognizing digital assets as a new emerging legitimate asset class, then it becomes a question of, well, how do you build out a comprehensive investment product suite to really cater to this new asset class and to retail investors, but also institutional clients, worldwide. And so, with the mention of the ETF, we think that's extremely important. The advent of spot ETFs, in the U.S. and obviously they exist in other parts around the world. But just a great way to access this asset class through low cost, kind of market beta, these single asset ETFs, and we think there'll be more, and we think there'll be multi-coin ETFs, and really we're just getting started there. And then in addition to completely passive, there's obviously ways to get exposure through blockchain venture capital. So we're active in that part of the market as well. In addition to kind of best ideas for tokens and putting together portfolios of this new asset class of actual digital asset tokens and their kind of claim on the value that these networks and these ecosystems can create. And so it's really exciting times, right? Because you have this transformational technology that is the blockchain and everything that you can do with it, and then you have this new asset class. And so your question around regulation, I think, really impacts both of these. And a good analogy that I like to use is at the blockchain level, right? So we're taking products, tokenizing them, and putting them on chain. And we believe in open, permissionless public blockchains. But there's obviously more than one blockchain, there Ethereum and Solana. And so our product right now is on 8 different open and public permissionless chains. And each one is the analogy here is that each chain and ecosystem is a little bit like each country and regulatory regime around the world. And the goal is to decrease friction and really improve interoperability between different parts around the world as we access this technology and this asset class, and then underneath the hood, interoperability between these ecosystems. So I think the regulatory piece is extremely important as it decreases kind of friction and allows for the transfer of assets and wealth between regions. And as my colleagues here have referenced, I think as we look to 2025, there's a lot to be excited and optimistic about in the U.S., here in the UAE, and abroad. So I think we're going to see regulatory catalysts really kind of open up a more constructive and friendly environment for kind of getting business done. And then also as interoperability between these ecosystems improves, I think we'll also see greater utility done at the kind of blockchain level.
And just to double down on this question, I've been working quite a lot with the regulation, and back in 2017, there was no regulation around blockchain, right? But all the different consultancies, they started looking into the risks around the blockchain. Do you see that there is a potential of regulation stifling innovation, or do you think it will continue at pace, the innovation,
Yeah, I think it's an unlock. So I think the pace actually will improve and continue and get better in the U.S. And abroad. I think all of our firms here have global footprints, right? And so we're trying to take advantage of the global footprint and these different regulatory regimes. But I think in each one we're seeing improvements, and so I think it will only accelerate innovation and adoption, and that'll be driven by kind of this unlock or this release, just a more friendly attitude towards digital assets and crypto.
All right, thank you. And Bakar, over to you. So we are coming towards the end of 2024, right? But if you were to make predictions in the next 3 to 5 years, what do you see are the key opportunities, but also the risks?
Glad you didn't ask me about the Bitcoin price. So we're coming at a point in time now where scale is needed. I mean, up until now, if you look at the market, crypto market is what, 4 trillion, 5 trillion, give or take, right?
3.5 almost.
Now 3.5, yeah. So if you look at the markets that Standard Chartered Security Services operates on, the total custody size of the world is between $250 to $300 trillion. These are the kind of assets that are floating around. So the markets are markedly different, and given what Franklin does and what Coinbase does, and Brett's been in and around investment banks most of his career, the scale requirements are going to be massive, and next year is all about scale, right? So large key institutions entering the space with real scale, enabling digital assets, not just crypto, but non-crypto digital assets, is the actual real use case next year. Whether you talk about collateral management, whether you talk about lending, whether you talk about prime, whether you talk about outright coin lending, right? So all of these things to be really successful after the legislative process in the United States, and then some of the adoption by the BIS in the wider prudential regulatory regimes, as well as MiCA, scale is number one priority. At least from the bank's point of view, we need to be able to support our existing clients and new clients that are coming on board to give them the backing of the bank. Either that is from our custody platform, our tokenization capability, our balance sheet, our capability to lend and connect different parts of the world into a singular ledger as much as possible. So if this time next year, if the banks haven't come in and started to offer crypto custody from their balance sheet backing, and they haven't been able to lend to some extent or provide some liquidity behind some of the crypto activities, I think it's going to be a bit of a missed opportunity, but that's what all of us are gearing towards.
All right. And just a question, because there was a lot of conversation about the Bitcoin and the price, which keeps going up. And I think Eric Trump mentioned it's going to be $1 million a couple of days ago. What do you think?
Okay. We have a very distinguished digital assets research team quoted all over the world. Their view is that we are not too far away from 200,000 for a start, in the longer term, up to 7 figures, easily.
But just to finish up, so should people be investing, or it's likely to crash?
Oh, do tell. We all want to know.
You're asking an institutional bank whether something will crash. Of course, I'll say no. But generally speaking, okay, let's look at the actual building blocks in the industry at the moment. So for the past 10, 15 years, the spot market has been, bubbling away. Then you've got Franklin Templeton, you've got BlackRock, you've got other, ETF providers coming in. Now, what's happening at the back end of that is there's a whole treasury team, risk management team sitting there watching the books, and they're putting hedges on, they're playing in the money markets, they're playing in all sorts of instruments to make sure that, yes, they can protect themselves. Yes, there's a level of hedging that you can do that you sort of completely don't miss out on the upside. But genuinely speaking, there are some, levels of protection that are in the industry that I don't expect it to go 20, 30, 40% down. Let's just say that.
I just want to draw a point out. So I'm not going to weigh in on price predictions. I don't think it's helpful. But I want to make sure the audience doesn't miss a really important point. So, which is, Franklin, Standard Chartered, everyone who's an institution is trying to activate across a number of things in the asset class. So activity is not limited to a single point in time of buying some Bitcoin. That's not what it's about. And so instead, it's an expansive thesis about innovation and disruption. And when institutions want to enter, they need everything from start to finish. So they need to be able to safely buy it effectively at a good price, use smart order routing, have a qualified custodian to safely hold assets, to receive trade financing, to perhaps receive passive income from assets held where they want to earn incremental yield, to be able to put money at rest into stablecoin and to earn yield, to be able to stake native assets in crypto. I could go on, but this is like the Coinbase platform. And so when you think about their visions of what they'd like to do in the asset class, it's really super important to have a product platform that has a holistic experience across all these different things. That's an important point. We can be future, we can think about the price in the future, et cetera. If you can't invest safely, if you don't have a seamless experience across a number of different products, it's not going to work, and it won't scale. So I do believe in your point on scaling, and I think we're all developing platforms that'll do exactly that.
Yeah.
Thank you. And
And
Christopher.
the thing I would add there, as we decrease counterparty risk of engaging with this asset class, then we can really just focus on the fundamentals of these, digital asset tokens. And so your question was almost a little speculative in nature. Where is the price going? Is it going to crash? But I spend all day actually looking at the fundamentals of these ecosystems and networks, and through the tokenomic design of a protocol, is there a way for any of the value that network or ecosystem creates to accrue back to the price of the token? And this really is, we believe, rooted in fundamentals and can be looked at like you would look at traditional asset classes. So, we try to borrow best practices from equity and credit and commodities, all these mental models and frameworks and valuation techniques, and apply them to this new asset class. There's a ton of nuance. It's not a one size fits all, but we're firmly of the belief that you can actually come to a fundamental view on value for these things. And as the chain, again, as counterparty risk comes down and it's safe and trusted with who or where you get your tokens from, where you custody it, then you can just really focus on the fundamentals of these protocols and these tokens.
Yeah, so I think generally the conclusion is you are helping the customers to be safe and secure while scaling. And this is going to continue in the region as much as possible. I guess if I leave, because we have a couple of minutes left, and if we just do one key takeaway from each one of you, what are they? Very short and sweet for the audience. What would it be?
I can go first. I think we're going to see, as you introduced us, right? You talked about how we have traditional finance backgrounds, and now we're kind of fully immersed in digital assets and the digital world. And I think 2025, we're going to see more blending of these two worlds. I think the ETF was, the digital asset crypto ETF was a great innovation to take that traditional wrapper of an ETF and wrap a digitally native product. I think we'll see more use cases of that applied. We will put the ETF wrapper on more different kinds of digitally native products and bring access that way. And then the opposite will be true. We're already starting to see traditional assets and funds be tokenized and put on chain. I think that is the end game. More and more assets are going to come on chain. And so as we look to 2025, I think the blending of these two worlds will happen along both of these dimensions.
The one mega trend, okay, is institutional adoption, and it's happening in every subsegment of the universe, whether it's hedge funds, asset management, corporates, wealth platforms, payment providers, and all of them want to use platforms that are regulated and trusted and operate well across all the world. And this is going to be a competitive moat for anyone that opts into regulation and can provide that trust and seamless experience. That's the big point.
I sort of echo both of the sentiments in a way where the key aspect of enablement for a utility of digital assets across the wider financial services sector requires harmonization of approaches and some consolidation. I'm not suggesting that there's going to be massive M&A activity, but as large institutions do come in, you would see banks, asset managers, hedge funds, the really big end of town who've been playing in the field for decades and decades, look to provide these services, and that is something that you will see become a norm, which wasn't the case a few years ago. So to be able to achieve that, you need connectivity, you need cross-communication, being able to talk to your TradFi people within your bank about new and wonderful things with the help of people like Franklin Templeton, Coinbase, and Standard Chartered. That's, I think, where the world is going in the next 12 to 24 months.
So one forward-looking point, which is
10 seconds.
what comes next. And what comes next is institutional activity on chain. And I'm looking at my CBAM colleagues in the audience that have the Diamond platform that are going to bring issuers and investors together on chain. So look out for it.
Thank you so much.
Thank you.
So we are out of time. Thank you so much to the audience as well for listening. The Bitcoin question wasn't pre-prepared. I was just quite interested because I was asked by the media about it today. And I thought it may be interesting to the audience as well. I guess our panelists will stay around if you have any burning questions. And thank you so much for being with us today. Thank you.
Thank you.